How's it going, everyone? I'm here just giving a quick update on the S&P 500 in the US stock market, and I wanted to make a quick announcement that most of these S&P 500 updates, for those that are interested, are going to be posted on my Instagram account. And I think that's called Money Digest with Abie Buttar. And I'll have a link in the description below, and you can also access that by clicking the little Instagram logo on the home menu of my YouTube channel. I'll still do some S&P 500 videos at critical junctures because this is the market index that I look at the most, and I know most people look at the S&P 500 as the representation of the US stock market. And so I'll definitely still do some videos here and there at very critical junctures, but most of my short-term updates will now just be on my Instagram account through some images and a detailed description in the caption. I know many of you are interested in the stock market, but are not necessarily active traders or really care about the short-term movements. And so that's why I want to make sure that I primarily focus this channel on the longer-term topics that are more critical and important to all that are watching. So in my last video, I covered the important levels of 34.32 on the upside and 32.10 to the downside, and that if we broke above 34.32, the probability of us reaching another all-time high in the markets would become much more probable. Whereas if we broke to the downside below 32.10, then this would open up a lot more downside potential. So if we zoom into this area of the chart by looking at the 4-hour chart, we can see that during my last video, I covered the market action over here, and we had tested this very important level over here at 34.32. So I'll go ahead and put that in, and 32.10 was the downside to where this could start developing into a larger impulse down. But that is not what happened. We ended up breaking this resistance level and continued higher. So given that, I would conclude this is most likely a 3-wave correction from early September to late September. And now we are in the developments of a 5-wave move up, which means we will take out the all-time high. Now, again, this will be invalidated if we break this structure. So now where is that level? And I actually kind of mentioned this in my last video as I was looking at this developing wave pattern where this looked like a 5-wave move heading up. And then we had a 3-wave correction. So this to me is the top of wave 1 of a developing pattern. So if the S&P 500 breaks below this level, then that would break down the entire impulse structure. And that would mean that we might be heading much, much lower and that this might have been a more significant top. However, right now it looks like this is a developing impulse pattern. And to me, it looks like we are in a wave 3. And so I would draw this out like this, where we have 5 waves up, 3 waves down. And now we're developing 5 waves up where we have 1, 2, 3, 4, and I expect another push up before we head any lower. So something probably testing the all-time high, and then we have a larger move down, and then another impulse up. You can't really predict how this is going to actually shape out, but it is just a theoretical way of viewing the markets. And right now, the markets do look healthy from a price action standpoint, from a wave count standpoint. This does look bullish, and we've definitely set in a lot of support here. We can see this, that price has really been reacting around this level and has formed some very nice support right around this area where price has failed to go much lower. And this kind of looks like a reverse head and shoulders pattern. And that is usually a bottoming pattern, at least in the short term. And so that's the way I am looking at this chart. And I am expecting a continued move up in the short term, unless we break below the very key level of 33.96. In addition to this chart, I also wanted to show you all this chart, the S&P 500. This just takes into account the daily price movements of the S&P 500 during the US trading hours, so from 9:30 to 4 p.m. Whereas this chart over here takes into account all of the price movements of the S&P 500, including the Globex session overnight. And so this takes into account overnight trading that happened. And so I like looking at this chart because it really gives me a lot of information on the price movements, and not only the price movements that occur during the US trading hours. So in this chart, I've just drawn some very simple trend lines, and this is the fundamental trend line right here. And then I cloned 3 other trend lines and have kind of placed them in a way to kind of encapsulate the rally since April. And so in this chart, it really shows how price has remained within these 2 trend lines for the most amount of time. And these are kind of the extreme price movements when it gets above this trend line and below this trend line. And so we ended up breaking this whole channel back in late September. And this was the first time we broke it since this area, but this was only about a day of a break. And so this was a pretty substantial break of the trend line. A lot of people started thinking that this could start developing in a larger crash. And so I showed in my last video the wave count, how this only looked like an ABC, and it needed to continue to extend. And once we went over to this area, we needed to stay below 34.32. And we did not. We broke above that and continued this rally. And we have also re-entered this channel. And so as long as we stay within this channel, I think this is bullish for the stock market and healthy price action. But if we start really breaking away from this channel, then this could develop into a much larger correction. So now I'm just going to zoom into this area real quick and look at the short-term price action. And again, like I showed in this chart right here, I'm still looking at this as an ABC. And so this is the same chart just from a daily standpoint and only looking at the price movements during the US trading hours. But I'm still looking at this as an ABC, and we need to break below this 33.97 level in order to start making the case that the top is already in. Right now, this move, even though I was thinking that this could be a long-term top, and I did that video about a month ago, this does not look like a impulse pattern to the downside. And so it looks like we might have another top. And if we break this important 33.97 level, which is around a very important long-term line too, this was the all-time high back in February before we started the big crash in February and March. And we can also see that there is a lot of price action around this level. And so this is a very important level from a long-term standpoint, from a price action standpoint, from a psychological standpoint, being that it's around the round number of 3,400, and also from a wave count standpoint, because this is the top of what looks like wave 1 of a potentially larger impulse to the top side. And so this is a very important level. If we break 33.97, and it really doesn't matter when we break it, I think that will trigger a much larger decline because it will basically confirm that this impulsive structure has broken down from a technical analysis standpoint. Anyways, as bearish as I may be, I want to make sure that I'm looking at this from an objective light, looking at it from a purely technical standpoint, and not letting my long-term bias get in the way of my short-term analysis and perspective. And so for now, this rally does look healthy, and we're back in this trading channel that we have been in since April, and we are showing signs of an impulsive leg up after a seemingly corrective move back in September. And so what is the bullish case in the short term? Well, as long as we stay above 33.97 and we stay above 34.32 in the short run, then the upside for the next couple months could be pretty decent. These are the important levels. And in my case, this is a very, very critical line, not only in the short term, but in the long term as well. But in conclusion, here are the 3 levels that I'm going to be focusing on the most. The most important level right here is at 33.97, right around 3,400. this is the most important level. If we break this level, then this could get pretty ugly pretty quickly. But as long as we hold above this, the market looks good. Short term, I'm still looking at 34.32. This has broken out finally since my last video and has now become support. And as long as we hold above this level in the short term, the market looks pretty good. If we take this level out before making another high, before taking out 35.50, then this is a short-term signal that is not good for the market. Because if we break this down just a little bit, looking at the 4-hour chart, so far since this correction that we had here, it looks like we've had only 3 waves up. So we've had 1 wave, 2 waves, a big 3rd wave, and a 4th wave. So I am expecting one more push up where we break above the 35.50 level before heading lower. If we do not, and this market then breaks below 34.32, that would invalidate one of the important wave principles, which wave 4 is not to overlap wave 1. And so that is why I'm still focusing on 34.32 as a short-term level. And I know this sometimes may seem a little weird, but I just wanted to explain the rationale behind some of these levels, because I'm both using price action and also Elliott wave theory. And the third level that I'm going to be focusing on is this bottom trend line of this larger channel that has really been the foundation of this trend up that we've had since April. And so this is a pretty important line, and as long as we are within this channel, then I think the market looks pretty healthy. This is basically the buy zone of the channel. You would have your stop loss right below this channel. This is the neutral zone. This is kind of the sweet spot of the channel. And this part of the channel is the overbought zone, or the bubble zone in the short-term stance. And so we can see that when the market has gone above this channel line right here, it has not stayed there very long and has resulted in some very quick and violent volatility. And so we saw that same thing over here when I made my first video on the S&P 500 around the end of August, beginning of September. So that's just how I'm kind of conceptualizing this market structure. And those are the 3 important levels that I'm looking at in the short term, in the coming weeks and possibly months, as long as this market continues to hold above these very important levels. And again, if you're interested in this kind of content covering the S&P 500 and the important levels to be looking at in the state of the US stock market, then be sure to check out and follow my Instagram page, where I'm going to be dedicating most of this kind of content to. After all, regardless of how the market behaves in the next several months, this will not change the larger and more important forces at play. And so I hope separating my content in this way will allow me to focus more on these important concepts on this channel and still enable me to inform people that are interested on the short-term developments on my Instagram page. So anyways, if you have any questions, let me know in the comments, and thanks so much for watching, and I'll see you all next time.